So how do I look at positioning? Well, I'm a futures trader. I look at positioning in the futures market. This is the commitment to traders data, which is released every Friday. Okay, and it's as of the Wednesday close. So it's as of the Tuesday close. So it's 3 days delayed, which is not that much when you are, I'm not day trading this stuff. I'm looking for major turns in the market. So there's three types of traders. When you fill out a futures account opening form, you have to declare yourself. You are either a speculator, which is most of us, or you are a commercial, which means you're a farmer, that's hedging his weed exposure or whatever. And the advantage of saying that you are a commercial trader is that you get much lower margins because they know you have the physical to back it up, right? So the risk to the counterparties is less. So it gets broken down into these commercial traders, what they're doing, and then what the speculators are doing. And the speculators are broken into two groups, right? Large speculators and small speculators. And that's determined by if you have a certain position size in your account for each market, there's a different level. But if you're over X amount of contracts, you have to declare that, right? And so if you have to declare that, you're considered a large speculator. And everybody else, me, you, whoever, falls into the small speculator category, right? So this data is all giving out. Where are the commercial traders positioned? Where are the speculators positioned? And this is what the chart looks like of it. The red being the commercial speculators, the commercials, and the blue being the large speculators, and the yellow being the small speculators, right? So there's a lot of ways to use this data. I personally like to use it. I pick turns in the market. I'm picking sort of medium to long-term turns in the market. And the way I'm doing that is I'm looking for speculators to be mega one-sided, as we've talked about, right? So they're over discounting in either the trend, which a lot of futures traders are trend followers, or they're over discounting in the fundamental that they're seeing to make them so short or so long a certain market. And once it gets to that crowded level, I'm looking to go the other way because it gives the potential, if they're mega short, that if the market turns, right, they can all get squeezed and there can be a big move the other way. And if the market doesn't turn and the fundamentals continue to be, let's say they're all short, the fundamentals continue to be poor and the trend continues to be down or whatever, the move is not going to be as big as the other way, which is where I get into that risk reward thing. Because they're already in, you know what I mean? All this stuff is already very much discounted in, right? Doesn't mean it can't happen. It happens. I have trades that go against me all the time, but they're very small relative to the moves that go the other way. So I think that that's the key to it. So that's the data that I use a lot. On top of that, I'm also looking, reading, listening to what a lot of these strategists are talking about, right? Because that also helps to determine if it's being discounted. And positioning is the best place. Talk is the one thing. Positioning is much more valuable. It's one thing to say you're bullish. It's another thing to be, mega levered in, right? And this is trying to capture that. But I do listen and read and to try and figure out why it is that they have this big positioning, what the fundamental story is. Because what I'm looking for at that point to trigger a trade, I don't just get into a trade because it's crowded. I'm looking to trigger a trade where these people get what they were looking for. So they're short the stock market because they think that inflation is going to be too high, right? So now I'm looking for them to be confirmed on that. Okay, here's an inflation number and it's much higher than expected. And then the market doesn't go down on that. That's when I trigger a trade. And why didn't it go down on that? Did everybody not see that the number was higher than expected? Of course, everybody saw it. My answer is because everybody's already short, right? So therefore it can't go down. The market's not going down anymore. They're already short. It's already over discounted, right? So that's how I use the data. But it can be used for a lot of other things too. Let's say you're a trend follower and you're following a trend. You'd much rather be in a trend that is not crowded than a trend that is crowded. I think that we could argue that if two markets charts look exactly the same, and one everybody in the world is long and one nobody's long, you would want to be in the one that nobody's long rather than the one that everyone in the world is long. knowing that everyone in the world doesn't become a profitable trader. In fact, the vast majority of people lose money trading. So you want to kind of be against that, right? That's another way to use it, but there's a tons of ways to use this data, which I'll get into a little bit later. But so I'll give a few examples from recently. This is the copper chart. And we know that if you pay attention to copper at all, that in the beginning to the middle of May of this year, people started to get super crazy with copper, right? It became the new AI play. All of a sudden, we kept hearing about how they were going to have so much more electricity to support all this AI stuff and copper was needed for all this electricity and all that. People started getting sort of crazy bullish there. And this showed up, in this positioning chart. You can see, look where the commercials were, super short, and look where all the speculators were, super long, right? So at that point, we're looking to get short. And then again, we're looking for some kind of news failure type event to confirm it. Just like any kind of trading you do, no matter what it is, you should always wait for the market to confirm what you're thinking before you do it, right? Rather than fighting the tape just because you think you know what's going to happen, right? That'll get you run over, right? So you get a confirmation and we get short copper. And to this point, not every one of these trades works, I promise you, but to this point, this trade has done well. From here, where they were max crowded, to where we are now, copper's down a good 15%, which is a pretty good move in a month, You think about if the S&P moved 15% in a month, people would be going crazy. And there it was, we had this news failure here, and then it kind of came down 15%. And I'm still riding this trade. And what I do, because of what I'm trying to capture, which is this overcrowdedness, once that goes back to neutral, I get out. I either get stopped. If I am to short something and it goes back through new highs, well, then I get stopped, right? If I'm trying to pick a turn and I'm short and it's at a new high, then clearly I didn't pick the turn. So by definition, I didn't get it, so I'm out. But for my winning trades, I wait for this stuff to go back to neutral, because then my edge is gone. My trading, both my entry, my stop, and my exit, it's all based on the edge I'm trying to capture, right? So if the edge is everybody's too crowded, when they are no longer too crowded, I get out, take my profit, right? That's what I capture, right? Or that's what I try to capture. And we're waiting now on the copper to get less crowded here and get out. Don't know how long it takes. Sometimes it takes a few weeks. Sometimes it takes a few months. I've had trades last over a year, which is rare. Usually it's 3 to 4 months kind of area. Here's another example. This is a current example, the Canadian dollar. We currently have speculators the shortest they have ever been in the Canadian dollar in history. Okay. Does that mean the Canadian dollar is going to go the other way? No. What it means is that if the Canadian dollar starts to go the other way, there's potential for a huge squeeze, right? And on top of that, I have noticed, probably not coincidentally, in the last 2-3 weeks, a whole bunch of these macro gurus are coming out and talking about the Canadian economy and how weak it is and how they're going to have to keep cutting rates and all this. So we know that that is very much discounted into the market, both from what these people are talking about and from the fact that the positioning is showing that, right? So again, I wait for, let's say, if that's why they're doing it, I wait for a weak number in Canada, which should mean rates are going to go down in Canada, which should mean the Canadian dollar goes down. And the Canadian dollar doesn't go down on that. It probably goes down when the number comes out, and then it rebounds and finishes up. Reversal day. So I will buy the Canadian dollar then. I will stop on that low of that day where they freaked out on the bad news, or I will ride it until this goes neutral.
Okay, welcome back everybody. Just want to make a quick announcement about something, a project that we're super excited about. We'll be hosting a TraderLion webinar featuring Jason Shapiro, of course, talking about how to interpret and trade based on COT data and positioning. We're excited about this. You can visit TraderLion.com/university to register. Spots are limited to 500 live participants. And Jason, just want to kind of hand it over to you. What are you most looking forward to sharing with the students who attend the webinar, and what do you hope that they can get out of it?
So there's really kind of two things I think I'm going to focus on. The first one is really more about what it is that trading does, for your overall portfolio and your overall growth of your wealth and your net worth, which is really what obviously we want to do here. And I'm going to get into where it fits into an overall portfolio and how to approach that. Um, and then more specifically, when it comes to trading and how to approach markets, I'm going to focus a lot about the things that I like to look at, which is positioning. And how positioning is what I observe to be the real discounting method of a market. And in particular, positioning is where I think you can find some really good risk reward opportunities in the market. A lot of people obviously look at price in a lot of different ways. They look at I tend to be pretty contrarian trader. When people try to be contrarian, they focus on price and say things like, oh, this has gone up a lot, therefore I'm going to short it. I'm against that type of thinking. I think that's how you get run over. I'm not a fighter of the tape, so to speak. So I look at positioning, and within looking at positioning, the COT, commitments of traders data, is one important input of positioning that I use a lot. So I was going to talk a lot about that too and how I use it.
Yeah, perfect. And for people who maybe aren't super familiar with your background, would you mind just kind of touching on that, when you first started trading and your career up to this point?
Yeah, I mean, I'm 56 now. I started trading when I was about 22. When I lived in Asia, I was trading the Hong Kong market. I was trading for myself back then, and did that for quite a number of years. And then I sort of moved on and started managing money, and I worked at a pretty big hedge fund and managed money there for a long time, and then left and started my own firm, my own CTA, which is what I do now. I manage institutional assets in a CTA. I'm a futures trader.
And of course, you were featured in the last Market Wizards book, which I know have been a big influence on you. I know that's a recommended resource to reread those. So just want to mention that as well. And just to emphasize for people who maybe are thinking about attending this webinar, what are some of the top lessons that you hope to pass on to share with them?
Again, trading is to me not about predicting the future. That's what gets you in trouble. Trading is about trying to identify situations where there is good risk reward, meaning if you're going to lose on this trade, you lose $1. And if you're going to make on this trade, you make, $5, $6 type of thing. And over time, that's how you're going to put up positive returns in the market. We all get stuck in this idea of trying to predict the future, which really is impossible to do over time. Doesn't mean any one time you can't say, hey, this thing's going up, and it goes up and you're like, oh, I knew it, right? You didn't know it. Okay. It was a heads or tail situation and you got it, right? But over time, I think people will find that that's not going to work for them. What's going to work for them is trying to identify and execute in good risk reward situations.
Yep,
And I
perfect.
have to focus on how I find those. I'm not the only one that finds those. I have a certain way that I find them, and I'm going to share that.
Yeah, excellent. Yeah, I'm personally looking forward to learning more about your style from this webinar. So thank you, Jason. Really looking forward to it. To everybody interested in signing up, you can go ahead, as I mentioned, visit traderlion.com/university, and there'll be a spot right there where you can register. So hope to see you guys all there, and we'll see you guys in just a bit. Take care.